As promised, it's time for the Personal Finance Corner. Faye joins in for more. Faye, what's up for discussion?
Well, two new NFOs in the market from Deutsche Mutual Fund. We're going to find out if they're worth our money. Let me bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, thank you so much for joining us. Deutsche Mutual Fund has launched two NFOs. The DWS Inflation-Indexed Bond. Let's start with that one. NFO period Jan 16th to 27th this year. Open-ended debt fund that will invest in the government's inflation-indexed bonds. Now, this obviously sounds like a novel idea, but as investors, should we be considering this fund or should we go directly to the inflation-indexed bonds?
These funds certainly deliver something which was not available to Indian investors, and this fund will be investing in those bonds which was otherwise not available to individual investors, and the option which is available to individual investors. In fact, there is an inflation index bond available to individual investor which will close available till March 31st 2014. But the problem is that once you invest in that fund, in that bond, you don't get any periodic income. All the money keeps accumulating over time, and the return is linked to it's 1.5% more than the prevailing inflation. So your money will be inflation adjusted, your return will be inflation adjusted, but you don't have any liquidity, and you will have interim liquidity that they will be listed, but you will have no periodic income. So by investing in this fund, one is that you will have a more liquid mechanism, and but it comes with a cost. I think it will cost anywhere between 50 basis point to 1%, and that will reasonably offset the gain for which you are investing.
Obviously, so that comes as a cost. Well, the second NFO is the DWS Euroland Offshore Fund, Dhirendra, open-ended overseas fund that will focus on Europe. Now, given in the past you've mentioned the merits of investing in a US-specific fund, do you recommend a EU-specific fund now?
This fund also looks very promising, and a EU fund, Euroland fund, basically is they are home to some very prominent global companies. So from that standpoint, it looks interesting. Also compared to the US fund, this market is relatively cheap. So there might be an opportunity here, but I still continue to like the US opportunity, the fund investing in the US.
All right, two new funds in the market, both offering something unique, but keep in mind both the cost and the risk that you'll be taking on. We have a question from one of our viewers. Ranjit has written in. He tells us he plans to buy a home in 3 years with a budget of about 50 lakh rupees. He wants you to give him some funds to achieve the initial corpus of 20 lakh rupees in the next 3 years. He's currently using the ICICI Prudential Focus Blue Chip. And he also wants a fund that he can use over 1 or 2 years to accumulate an emergency fund. Dhirendra, so he has two needs. One is an emergency fund, so he needs to put that away. It has to be liquid. And secondly, he wants something to build a corpus for his down payment. What would you recommend he does?
For your emergency fund, consider investing in a ultra short-term bond fund or a liquid fund. And for investments of for 2 to 3 years investment, I suggest that for a goal where which is slightly negotiable, if you get returns earlier, you can actually prepone your plan to buy your house, or you can postpone it by another year or so. For that, I would suggest that don't take too much risk here, and the way to at the same time to derive benefit from the equity market, I suggest you consider a balanced fund, but 3 years is too brief a period in which one should be taking equity exposure. So, but given that your goal is negotiable, you should consider that.